Disclaimer, this is not financial advice. Always do your own due diligence before putting your money to work. With that out of the way, let's have some fun and enjoy the episode. What's good, y'all? Welcome back to another episode of the Rich Off Gangs podcast. This is episode 42. Happy Money Mondays. I hope you all are doing well today, and I hope you all had a great weekend and got some money today in the market. But without further ado, let's get right to it and talk about what's been going on and what we can expect to take place going on this week in the market, y'all. All right, man. So last week and the week prior to last week, we've had continuous pullback back-to-back weeks. Today we saw some weakness as well in the market. What's been going on in the market? Simply put, the market is in a fear mode. And the reason why we're in a fear mode is because we've been having very historical runs in rising in prices from tech, memory, semiconductor stocks, all seeing very aggressive push higher in the market, which correlated to the market seeing very aggressive strength and positive growth. But currently what's happening around the economy is the yield prices, the yield rates are going up. So with the yield rates going up, that causes inflation to take place within the increase of the cost to borrow or to have debt, right? And so around everything that's going on regarding the AI story and the AI infrastructure is putting major companies like Google, companies like Meta, companies like Apple in positions to where they have to spend most, if not all of their CapEx and still borrow in order to keep up in the race to create the best manufacturing AI infrastructure. And so with that happening, that now puts the consumer or the investor in fear mode because they're not certain of whether or not this company is going to continue to be growing at a high rate due to the fact that the cost to borrow is increasing, and that company that's borrowing that money to create the AI facility or the AI infrastructure is now going in debt even more, which is not allowing them to see a better rate of return for the investment, which is now putting the investor in more fear to be confident in investing in these investments, which in result is giving the market the negative movement that we're seeing in the market currently. So that's the breakdown as to why we're seeing negative downside in the market. Now, what can you be doing as an investor in this current market state? Looking for opportunities is the best thing you could be doing in this current market state. There is a term used in the investment world called K.I.S.S. K-I-S-S. What it means is keep it simple, stupid. Meaning, keeping your simple approach and strategy that you've been doing the same. Don't change anything that you've been doing. Keeping the same ideas around your investments, keeping the same approach around your investments, keeping the same mentality around your investments the same exact way, and not changing from that theory or deviating from that theory, because nothing has really changed other than the cost to borrow. And so within that, yes, there's going to be a little bit of turbulence in this current period of time, but over the long period of time, once the cost of borrowing goes down, once the actual infrastructure around AI is developed, what will be the rate of return on that flip side of the infrastructure and created facilities around AI? That's what you got to think about as an investor. You have to think long-term and past this current moment, and you got to look at these downside moments and this bleeding in the market as opportunities to buy into your favorite companies that you like and love. All right, so that's what's been going on in the market. That's where the current market state is at. Now, I told you what we can do, what you can be doing in a market that is dipping, and what you can look to see, take place, what you can look to see as an opportunity to get into. Now I want to talk about what's been going up, because we've talked about what's going down, but let's talk about what's been going up. Gold and Bitcoin. These are two sectors that haven't seen a lot of growth since early this year. Bitcoin especially has been seeing a lot of selling pressure from late last year of 2025 going into this year of 2026, and currently year to date they're still only up barely over 5%, which is not bad at all, but they have a lot more room to run given that they've seen all-time highs closer to 120. So should you be buying Bitcoin and should you be buying gold? Yes, I mentioned earlier in the year prices and target prices to buy gold at. If it got down to 3,600, between 3,600 and 4,000, that is a buy the dip opportunity for gold. It got to 3,900, I believe, somewhere around 3,800 maybe, but no less than, it got below $4,000 is the point. So it got below the target price. If you didn't buy the dip, you missed the opportunity. That was your buying opportunity for gold. Why? Because it's still looked at as a safe hedge against more riskier investments. Gold is a tangible asset, something that is physically tangible and you can hold it, and it's a mineral resource that has value and it has a lot of scarcity and demand behind it. So it's always going to be something that you can put your money behind and it'll hold its value. So a lot of people have been transitioning the money that they made from Micron, the money that they made from SanDisk, the money that they made from NVIDIA, AVGO, and putting their money into gold, into Bitcoin, because of the fear behind the increase of the yield. So that's what's been going on in the market, y'all. Other companies that we've been seeing see a lot of growth, which we'll talk about some more high performers from last week. What I noticed was software seeing a little bit of a reversal, because these are all counter trend names that go against the AI infrastructure around memory, around semiconductors, and around the actual facilities being built. Software, Microsoft, Netflix, even Apple seeing a push higher, because those are the names that we know, like, and love, and we trust because they've been in the game for so long, and they're steady companies. They're not risky companies. They're not highly volatile, fluctuating prices companies. They're companies that have sound back end when it comes to paperwork and their numbers, their financials. They look good on paper. They look good in the economy, because if you perceive this company in the economy, you know it, like it, and you love it. So these companies are here to stay, and that's where you see a lot of the investors pouring their money into. So if you're an investor, you're looking for some type of return on investment in this current market, you need to be looking at where the market's flowing and where the money's going. And that's where those are the places that the money's going. All right. So yeah, that's what's been going on in the market the last 2 weeks. Now, there are some interesting data points coming out this week that we need to be keeping in mind, which I mentioned yesterday on my YouTube video for market recap and market predictions going into this week. If you guys have not checked that out, make sure to go check that out on YouTube at Continue to Believe Network. It's a short, quick, and easy video going over last week's price action in the stock market, technical analysis, breaking down the charts and breaking down all things technical analysis, and then also going over a few economic data points that we'll be having to keep in mind going into this week. Number one thing that's taking place this week is NVIDIA reports their earnings on Wednesday. Wednesday afternoon, after the market closes, NVIDIA will be reporting their earnings. So keep that in mind going into this week. If you are a day trader or an investor or a swing trader, you want to keep in mind that NVIDIA reports earnings on Wednesday afternoon, and that typically has some form of a impact on the semiconductor space overall. And I'm sure it will also have an impact on Micron, memory companies, and the overall AI infrastructure build around semiconductor space. So just keep that in mind going into this week. We didn't see too much crazy price action. We did see some selling pressure come in. But once again, I do think that once we get that data report, we'll probably see more price action kick in after NVIDIA reports their earnings. There's another event going on this week, later in the week on Thursday. So that event, I can't think of the name of it, it's off the top of my head. It's something Jackson Holmes event or something like that. I'll have to look it up and add it in later. But they have, it's an economic event that takes place every year, where the Fed and institutional banks, commercial banks all come together. They discuss interest rates, yields, and such, and they come up with ideas around what can be good solutions for the economy going forward. So this could be another major headline that can possibly take place in this week, specifically on Thursday or Friday, after NVIDIA reports their earnings, around what the economy can expect to see take place in these next few months, because the Fed has already announced that they don't plan to adjust interest rates at all. They plan to just watch the yield. And so people have been watching the yield, and since they've been seeing the yield increase, that has been causing the fear. So if we see something other than the yield increase and maybe a decrease, that can cause some form of a market production or market rally to take place in the market, allowing us to see potential all-time highs. So that's another data point that's taking place this week. Another thing that's taking place on Wednesday is the PCE inflation data. That is something that the Fed looks at to determine how they will gauge increasing or decreasing or neutralizing or keeping them rates moderate. So that is another data point that's taking place this week. Other than that, it's a pretty slow week in my opinion. It's not too much going on in the market for day trading. And so I would just be mindful of the month ahead and the months to come, because there are a lot of things going on in the market and in the economy that can have a lot of effectivity on the market's movement. Midterms being the biggest thing in October. But right now, it's going into September, I don't think that it's going to be too crazy of a month, given that September typically is not that much of a positive month. It's more of a negative month based off of data and history. So just keep that in mind going into this month of September. We are in the last week of August, so that is something to keep in mind as you guys are heading into this next month, how you should be prepared and preparing yourself for the potential market and price action that we can possibly see going into this next month. If you guys want more tips and tricks about day trading and investing, make sure to click the link in the bio, www.continuebelief.com. I share a lot of free resources and tools, tips and tricks about how to day trade, how to get started investing, and so much more. So make sure you guys check out the link in the bio. Thank you guys so much. Make sure to leave a like and follow. And yeah, see you guys later. And it's just important to always be aware of what's going on in the market outside of data, but also in the charts and in your companies that you're investing in, because you don't ever want to be caught lacking with your pants down and the company you've been investing in for months on months has been running up, and then next thing you know, it's just a sharp sell-off and you missed out on a life-changing or generation-changing return on investment simply due to the fact that you weren't aware of the situation and what's going on in the investment that you're in. So you always want to be on point and knowing what's going on with your investments, where they're at in the story of AI and the story of everything going on in the economy, and just know how your company can be affected. You know, you want to be in the know and not in the know. You want to be understanding of the things that you're doing in the market. And that's just my personal opinion. So always look up on the things that's going on, look up on what's performing well, what's not, you know, what's outperforming the market, what's not outperforming the market, what's overlooked in the market. Because there's always going to be a company that's overlooked. And I know I mentioned Photonics a few weeks ago. I did a little bit of research. I didn't do too much deep diving into Photonics, but I do have a ticker symbol for you guys to keep an eye out for. And it just was released to the public markets in August. So this is a fairly new ETF, a really new ETF actually, and currently it's down. So that's a good sign, because I mean, it's not necessarily good or bad. It's not down a lot. It's down less than 10%. And that ticker symbol is LYTE, LYTE. Now, this sector or this ETF comes from the Round Hill institution, which was the institution that established the DRAM memory ETF, which was the memory sector ETF back in April. So I missed out on that personally. I wasn't doing enough research or due diligence on the DRAM story or the DRAM ETF at the time. So Round Hill started DRAM with less than $25 million, and they turned $25 million into over $55 billion simply due to investing into the memory sector. Now, if photonics is as in high demand for AI factories and AI infrastructure as people think, this can do a fraction, if not more, of what memory was able to do. Now, there are a few companies that I'm looking into. The number one company that I'm looking into is ticker symbol LITE, Light. That is the main company that I'm looking at. That is the company that the LITE ETF has the most ownership of in regards to shareholder price and the most exposure to in regards to the overall pie chart for the LYTE ETF. So those are the companies that's the company that I'm watching currently, but I will do more research and deep diving to see what other companies I'm looking at I may be interested in buying or looking to buy, but that's the main one that I'm looking at right now. So once again, I'm gonna do more research. I'm gonna come back to this video or this podcast with more information for you guys so I can give you guys the most amount of value possible. But right now, that's all I got for Light and Photonics. Keep that in mind as we go forward into this next half of the year and as we go forward into this next section of chapter of AI. You know, currently we're still dealing with the infrastructure. So within the infrastructure, what is in low supply that's in high demand? What are the things that we can capitalize on and make the most bang for our buck if we can find out where the lack of demand, the lack of supply is for these products? All right, so that's what we're doing deep diving research on. Until then, I'm going to stay invested in the companies that I'm invested in, and I advise y'all to do the same thing. The best thing you can do is hold for the long term. The longer term position you hold with more conviction and more confidence in your trade, the better the return will be if it's the right opportunity. Meaning, if you're investing into something like NVIDIA and you bought it 5 years ago and you continue to hold it 5 years later, another 10 years, that's a great investment in my mind because the story around AI has not changed and probably won't change for a while. And NVIDIA is going to be one of the leaders in that space. So staying invested for the long term is how you win over time. If you sell early and miss out, you miss out. So just don't miss out and hold for the long term. All right, but that'll be it for today, you guys. Hopefully you guys got some value from this. Hopefully you guys got a little bit of insight and feedback and updates from what's taking place in the market, how you guys should navigate in the market, what you should do regarding gold, if you should buy it, Bitcoin, if you should buy it, what you should do regarding photonics and the LYTE sector. And yeah, it's your boy CB. I thank you all for tuning in. God bless you all. I'll see you guys next week, same time, same place. Peace.